YouTube, what it do? It is your boy Young Soros here back with another video, and in today's video we're going to be going over why the stock market rally that's going to be going into the end of the year is pretty much guaranteed. It is set in stone. I got a couple indicators for you guys. I got a couple charts for you guys, and I want to point out some things that are going on within the markets these last 1 or 2 weeks that have been very interesting and very key as to why the market is going to go up at the end of the year going into October, November, and December. We already talked about how, these are usually bullish months for the stock market, but I got some other indicators that tell you that this is the time to be buying before the end of 2024. So if you guys like the video, drop a like down below. Let's jump right into it, starting with the volatility in the market has been extremely high over the last couple of days and couple of weeks, even coming into CPI and coming out of CPI and all that sort of stuff. And if you take a look at the stock market, these last 2 days we did not move. If you take a look, we didn't move. We ran up to this level up here, had a little squeeze going up into here, and then coming into today, clearly, as you can tell, we gapped down only to end up at the same spot we were at yesterday. The volatility is extremely high right now, and it seems like, there isn't a lot of selling pressure that is going into these lows, even though there are a lot of people that are fearful. As you can see, the market bounces right off these lows coming into yesterday and today, and once again hit the low and it bounced, and then that's where you start getting a little squeezy. And what's interesting about these huge moves you see in the markets is that once you start getting these big moves, these squeezy moves, that is a sign that is telling you that people are shorting and getting clapped on their shorts, and the market's going long. So they're getting clapped on their shorts, they're closing out of the shorts, and that's only making things go higher, and that is only adding fuel to the fire. But as you can see, you're not out of the woods just yet. You come over here after this little squeeze mode, and then you sell it almost all off back to where the first little squeeze mode stopped, and kind of relaxed. So what is the point I'm trying to get at? What I'm saying is that October is living up to its title as the most volatile month in the market. But don't get it twisted. The reason why this is happening is because there is a lot of conflicting trades, there's a lot of conflicting opportunities within the markets. And if you take a look at the Russell 2000, as a matter of fact, let's take a look at the Russell 2000. Oh, hold up, this out. If you take a look at the Russell 2000, from the get-go, they were immediately starting to squeeze coming into yesterday and today. They were immediately getting squeezy. They came all the way down. They didn't sell off as hard as the SPY and the NASDAQ. But what's interesting about the Russell is that they were getting beat down all year long. They were getting beat down. They were getting demolished. Like small caps were getting destroyed. And what's interesting about this move is that Russell 2000, it stayed green for the last 2 days. You haven't had this back and forth with the small caps, which you did with the SPY, NASDAQ, and Dow. So what am I trying to say here? What I'm trying to say here is that the Russell 2000 is usually a leader when it comes to rallies. If the Russell is rallying, then that means the market may rally. Or sometimes you'll have a rare occurrence where you have what you had this year, where only the Magnificent Seven came and just took off and propelled the market higher, and you still had the Russell 2000 in bear market territory. So it could also be that as well. But if small caps are starting to rip and they're not fading like we usually see them do, then that is a pretty good indication that these bigger names are ready to rip too. And we're also in earnings mode. What that means is basically we're in earnings season. Earnings season kicked off last Friday with the banks. Banks are doing really good so far, and you still got a bunch of earnings coming forward. You got Tesla, Netflix on Wednesday, and you have all these different companies that are going to report over these next couple weeks. And with that being said, The stock market is ignoring everything. Last week we were afraid of the bonds and how the bonds were breaking down. The bonds are still breaking down, but the stock market is just ignoring it. We should be way lower than where we are now, but because of earnings mode and earnings season, the stock market is just ignoring all of that, and it's saying, okay, where is the earnings at, and we'll see where we will move based on that. So earnings mode is one of the reasons why, if you're shorting the market and you're saying, oh, look at, Israel and going to war and all these different headlines, bad economic data, it does not matter. Earnings season takes priority over everything else. Once the stock market gets into a mode where it says we don't care about anything else, it will do its own thing regardless of how good or bad anything is. You can have, the only way the stock market I could see really fall from here is if they just outright announce we're going to war with Israel. So with that being said, I don't even predict. I am for certain that we're going to have a rally at the end of the year, and it's going to be because of earnings and the stock market just ignoring all the macro data. Because last week we were reacting to the bonds, the dollar, all this macro, the CPI, all that. And then you come into this week, it is almost like it didn't even matter. The stock market is rallying, back and forth volatility. Bonds are still selling off, dollars still ripping higher, still bad economic data coming out. And you even have Israel, war going on, war headlines. And then you have oil, and the stock market is still climbing up higher, still having this squeezy move. So with that being said, I want to show you guys something that's very interesting. If you take a look here, the fear and greed index. This is a great tool to know when a market bottom has formed, occurred, or even, it's a good register as to where people are within the markets and how things will move. Right now we're in fear. We were in extreme fear, 2-3 weeks ago, but a month ago we were at neutral. Now, you may be thinking to yourself, okay, what does this mean? Well, the market likes to move opposite of the fear and greed index. So the more fearful people are, the more the market wants to move higher, and vice versa. The more greedy people are, the more the market wants to move opposite of greed and balance out the equilibrium. And if you take a look at the momentum right now, we are at neutral. So even if the market drops a little bit more, you'll have more fear in the markets that will only propel the stock market to go even higher. If you take a look at new 52-week highs and lows on the NYSE, extreme fear. Market breadth, extreme fear. Extreme fear. Volatility is actually not that high, but it is high relative to what we have been dealing with over the last couple of months. So, with that being said, right, this is a great indicator as to what is driving the markets and what is going on with the markets and how investors feel going forward. And you can use this indicator as a way to trade opposite of the trend. So that doesn't necessarily guarantee anything. It doesn't guarantee anything. You could be in extreme fear for a good period of time, but extreme fear is a good indicator, unlike most, that will determine the direction of the price action and the way the market will move and things like that. So with that being said, those are the couple reasons why the market is going to have a rally at the end of the year. And also you have options expiration this week. It's going to be a quad witching. So usually the biggest moves occur during these option expirations. So maybe the market is just trying to shake things up before you get that explosive move higher. And with that being said, guys, I'm going to keep it a short video. I'm going to keep it a short video, but you don't want to miss out on the rally, the end of the year rally that's going to be happening really soon. Pick a stock, any stock, it doesn't matter. Just make sure, do your research. And then, maybe I'll talk about the 5 stocks that I recommend buying into at this rally. I'll make a video on that soon. But for now, just take your time and do your research, prepare for the stock market rally. You don't want to miss this. Everybody right now is shorting the market, and I know it looks bad, guys. I know things aren't looking the best, but if you look past all of that, you got to look further. You got to look beyond what the market sees. The market is forward looking. So right now, even though it is pricing in all this stuff, volatility and all that sort of stuff, it is forward looking. So it doesn't matter what's going on today. It only cares about what's going to happen tomorrow. So that is it, guys. I hope you guys enjoyed the video. Again, I'm keeping it short today. If you guys enjoyed it, make sure you drop a like, subscribe. It's been your boy Young Soros. Peace out.